China turns to Africa to mitigate impact of U.S. trade war. Beijing summit ends with promise of cooperation on business and security. Beijing/Cairo, China is seeking to further expand trade with Africa as a way to reduce risk from the U.S. trade dispute, a strategy made clear at a two-day summit ended Tuesday in Beijing. Expanding imports from Africa helps spread the risk presented by the U.S.-China trade war, an employee of a Chinese state-owned oil major told Nikkei. At the Forum on China-Africa Cooperation, the two sides adopted a joint statement and a three-year action plan, laying out plans to deepen cooperation in various fields. The leaders from both sides have reached significant common ground and spoken with one voice on all major issues, Chinese President Xi Jinping told reporters at the closing of the event. Priority areas of cooperation include boosting trade, nurturing African industry, and strengthening security. During Tuesday's session, Xi also stressed the importance of opposing protectionism and supporting free trade, an implicit reference to the go-it-alone attitude of the administration of U.S. President Donald Trump. Xi called on African leaders to work together for both sides to develop and prosper together. For China, Africa's biggest trading partner, the value of trade with the continent for the January-July period grew 20% year-on-year, with imports jumping 30%. to $56.8 billion and exports to Africa climbing 10% to $59.3 billion. China imported more crude oil from Angola and other countries in an apparent effort to compensate for declining imports of natural gas from the U.S. amid the two powers' mutual hiking of tariffs as well as Washington's move to impose sanctions on Iranian crude oil. In 2017, about 40% of China's crude oil imports came from the Middle East and about 20% from Africa. Compared to the previous year, imports from the Middle East inched down, while those from Africa surged by 1/5. China is trying to avoid relying on the Middle East and the U.S., so its proportion of oil sourced from Africa could reach as high as 30%, said an executive at an energy company. The growth in China's exports to Africa was driven by several factors, including the increasing difficulty of selling to the U.S., as well as expanded exports of solar power equipment. China shipped more automobiles and auto parts to African countries as well. Some African trading partners are unhappy with simply importing large amounts of factory-made goods from China, prompting Beijing to work on increasing local production in African countries and creating local jobs. Chinese truck maker Shaanxi Automobile Group in May started up an Algerian truck assembly plant through a local joint venture. State-owned Beijing Automotive Industry Corp., or BAIC, opened a passenger vehicle assembly plant in South Africa in July. For China, aside from securing crude oil and other resources, building ties with Africa presents an opportunity to reach the continent's combined market of over 1.2 billion potential consumers. But for some African countries, China makes an appealing partner because it does not withhold support due to concerns over democracy or human rights issues, as do some Western countries. Tuesday's joint statement reaffirmed China's intent to offer Africa aid with no political strings attached. Beijing continues to pour money into Africa, with foreign direct investment totaling about $40 billion cumulatively, close to America's leading figure of $57 billion. With the U.S. and Europe growing hesitant to make infrastructure loans to Africa, China's more proactive lending has made it an even more valuable partner. But some voices have expressed wariness of Africa becoming too reliant on China. The Eastern African country of Djibouti, which hosts a Chinese military base, has been called overly dependent on Chinese loans. The managing director of the International Monetary Fund, Christine Lagarde, said in April that China's infrastructure ventures abroad as part of its Belt and Road Initiative can lead to a problematic increase in debt, potentially limiting other spending as debt service rises. China tripled its offerings of grants and interest-free loans to Africa as it sought to dispel fears that borrowers would fall into so-called debt traps, as was the case with Sri Lanka, which was forced to hand Beijing control of a key port last year. Such assistance comprised $15 billion, or about a quarter of a $60 billion aid package Xi pledged to the continent on Monday, compared to $5 billion in another package of the same value China offered 3 years ago. China ups ante in trade war, imposes tariff that could doom U.S. paper recycling. Phoenix. Most of the headlines from the trade war between China and the United States have focused on tariffs on aluminum and steel, but China also has placed a levy on recycled paper pulp. While not as well known, the 25% tariff could bankrupt the beleaguered recycling industry in the United States. China's latest round of retaliatory tariffs against the U.S., announced in August, includes something called recovered fiber materials, basically the paper, newspaper, and cardboard that we put in the recycle bin. Trucks collect paper, bundle it at local centers, and sell it as bales, mostly to China, to be incorporated into new products. It's the cycle of recycling. And now there's a tariff on those exports, another cost for an industry already weakened by China's announcement in January that it no longer would import most plastics and certain other recycled goods from the United States. The tariff was put in place the day the Trump administration imposed additional duties on Chinese imports. This is a huge impact on the paper business in the United States, said Beizhu Chen, a business professor at the University of Southern California. By taking a unilateral position against other countries, imposing a tariff against other countries, the U.S. is causing huge damage on the global trading system. Certainly, the impact has been considerable to us in the first quarter, said Pete Keller, Vice President of Recycling and Sustainability for Republic Services, a solid waste collection company in Phoenix. So, increased cost, decreased revenue, that doesn't make for a winning equation in today's marketplace. Since China's import ban on most U.S. recycled products, municipal recycling programs have spent much of 2018 in crisis mode. And some U.S. cities can't make it work. Phoenix, though, has had damage, according to Rick Peters, Deputy Solid Waste Director for the city. Part of it is the dry climate from Phoenix really makes the materials being dry makes them easier to separate, he said. Phoenix has continued to export recycled paper to China during 2018, which has been key to keeping the program profitable. But that all changes with the tariff. Chen says the tariff will negatively affect both American and Chinese businesses. This will have a big impact in China on the paper industry. They are short of feedstock, he said. And all the businesses are thinking about where to get that feedstock and paper. If they are short of paper pulp, and also have an impact on the recycling business in the United States. China is the top importer of U.S. recycled paper, buying 2.73 million tons of U.S. corrugated cardboard during the first half of 2018, and 1.4 million tons of all other U.S.-sourced recovered fiber. Without China as the buyer of American recycled paper, the future of U.S. recycling is in doubt. China's economy has been booming for so long, Peters said, that they developed a huge appetite for our recycled materials, so they could turn it into new products and then ship them overseas to us in their shipping containers. And then the next thing you know, it was like 40% of U.S. recyclable paper was going to China. And this continued for many, many years. Trade between the two countries is not even. Last year, China's exports of goods and services to the United States totaled about $500 billion, which dwarfs China's imports from the U.S., which totaled about $150 billion. In time, Peters said, it's going to take time, probably maybe several years, if China does not go back to buying. It's going to take several years for demand and supply to get matched back up again to where the price of mixed paper and newspaper goes back up. Some businesses are not waiting for Beijing and Washington, D.C., to resolve the dispute. China's largest paper manufacturer has begun buying U.S. paper mills, which allows it to not only sell directly within the U.S., but also ship paper remanufactured in the U.S. to China without paying a tariff. Chen said, Nine Dragons, probably the largest paper company in China, has been importing U.S. waste paper and was considering investing in the United States to extract pulp from the papers and then sell the pulp into China, which is not in the ban. But now there is a tariff. In May, Nine Dragons bought 2 pulp and paper mills in Maine and Wisconsin from Catalyst Paper Holdings, a Canadian company that owns a closed paper mill in Snowflake, in northern Arizona. In August, Shangying International, China's third-largest recycled paper producer, signed a deal to acquire a mill in Kentucky. Neither Catalyst nor Nine Dragons commented on this report. Chen continued. So the strategy is coming to invest in the United States. Instead of exporting the waste paper directly, they buy the paper mill to process the waste paper and to turn it into the paper pulp. So, theoretically, these are much cleaner. These are not classified as recycled products. Arguably, as Chen says, if the new product is not classified as recycled paper, it would avoid a potential tariff. So now, instead of processing that in China and Nine Dragons, for example, those companies, they process the waste paper in the United States, he said. And it will be manufactured in a paper mill now owned by a Chinese company, not a U.S. one, leaving questions about the future of the U.S. recycling business. This story is part of Elemental, covering sustainability, a new multimedia collaboration between Cronkite News, Arizona PBS, KJZZ, KPCC, Rocky Mountain PBS, and PBS Sakal. Trump's trade war is causing China to consider merging two of its biggest mobile phone carriers. As we head into another step up in the US-China trade war, i.e., tariff on $billion of Chinese exports to the U.S., we believe the State Council would be more eager to think fresh and more radically about how to accelerate 5G rollout. Lee estimates that a combination will leave the country's telecommunication industry to mega carriers, CT/Unicom, and China Mobile, and allocate them different spectrum to allow both to aggressively develop 5G technology. Under a merged CT/Unicom scenario, T/UNCM will both be allocated the following: 1. 100 MHz of contiguous spectrum at 3.5 GHz, 2. 100 MHz of contiguous spectrum at 4.9 GHz, and 3. 50 MHz of contiguous spectrum at 3.3 GHz for indoor coverage, Lee said. In addition, the government may allocate 60 MHz of contiguous spectrum at 2.6 GHz to T/U, below CM's current allocation, and 40 MHz, above CM's current allocation, to CM so that CM can combine it with its existing 4G spectrum of 60 MHz. That means CM will have 100 MHz spectrum at 2.6 GHz to deploy more than T/U's 60 MHz. Fifth generation, or 5G, connectivity has been one of the core competitions between the two countries. The U.S. is pursuing a comprehensive wireless strategy to ensure that the nation will lead the world in the deployment of next-generation wireless technologies, according to Federal Communications Commission, who said 5G technology could be up to 100 times faster than current 4G service. Inside American companies reeling from Trump's trade war. Borage Home Fashions Inc.'s problem is feathers. For Empire Today, it has vinyl planks. At Jammy Inc., there is a whole bunch of things, from taillights to reflective tape. All three companies are on the losing end of President Donald Trump's trade war with China. Their supply chains have been disrupted, their planning and forecasting thrown into chaos. The whole experience has been, in the words of Jammy Chief Executive Officer Ralph Bradley, a real kick in the ass. The next blow could come this week, with tariffs of as much as 25% hitting $200 billion in goods, including materials and parts these businesses buy in bulk. The Trump administration has avoided putting duties on finished products like smartphones and sneakers, for fear of a consumer backlash at home, as it aims to punish China. But as it turns out, the president, who vowed to boost U.S. manufacturing, is hammering some of the companies that managed to survive globalization and thrive. Since Trump kicked off trade disputes with a big chunk of the world, these companies have been navigating to limit the financial pain and traverse the confusion. One day, a deal with Beijing seemed possible. The next, the president would vow to slap levies on everything the Asian nation sells to the U.S. They've thrown so many unknowns into it that it has made it challenging to make any long-term strategic decisions, Bradley said. It has a reason for loss of sleep. The first round of import duties on China hit $34 billion in products in July, the next on $16 billion worth in August. The $200 billion question has been hovering for weeks. It has all made for a lot of volatility here in tariff world, said Carol Tome, Chief Financial Officer of Home Depot Inc. The smaller the enterprise, of course, the more difficult the challenge. They don't have the economies of scale, the back office staff, the lobbying forces, or the deep pockets to roll with the punches, as a Home Depot-size company can do. Jami, an auto parts importer Bradley's dad started almost half a century ago in Fort Worth, Texas, has 11 employees, and recorded $12 million in revenue last year. It embraced globalization in the 80s, forging a joint venture with the factory in Shaoxing, in eastern China, that makes the injection-molded plastic and bent tubular steel Jami needs to fashion taillights and other parts for everything from giant lawnmowers to combines made in the U.S. It's impossible for a company like mine to just change their manufacturing location, said Bradley, 39, who estimated Jami has put $5 million into the Shaoxing plant. I have too much invested over there. The tariffs that went into effect on August 23 included reflective tape, the kind that goes on the sides of tractor trailers, so Bradley paid $7,500 to air freight 1,700 rolls a few days before. That was about 10 times the cost of shipping by boat, but he had orders to fill. And he spent so much of the summer scrambling, talking to customers and his sales team about how to steer Jami through the trade war, that he let other projects slide. He'd been planning to hire 2 people in logistics and marketing, but hasn't he found time to even write the job descriptions. Installing a new computer system was put on hold. If the latest round of tariffs proposed by Trump is implemented, parts in fully 85% of the products Jami sells will suddenly be as much as 25% more expensive. Passing that on would share the pain with customers including Bain Capital's American Trailer Works Inc., which makes utility and cargo trailers. At Blorge, based in Irwindale, California, there is a different level of stress out. The company's second factory just opened in an old steel plant in Allentown, Pennsylvania, that's big enough to add more sewing machines. The Trump tax overhaul reduced corporate tax rates for this year and gave CEO Ning He the capital to expand with the new facility at a cost of more than $1 million. Then Trump put feathers on his $200 billion tariff list. China is by far the biggest producer of fluffy down plucked from geese and ducks, the kind Blorge stuffs into about 70% of the pillows and duvets it makes for retailers including Macy's Inc. and Costco Wholesale Corp. There isn't a lot of wiggle room for the company, which employs around 100 people and has had about $100 million in sales over the past 3 years. I am in big trouble, said Ning, 55, who became a U.S. citizen after immigrating from China 3 decades ago. The way Trump is waging this trade war doesn't make sense to him. My first reaction was, this is stupid. If they are doing this smart, I have no complaint. The decision looks like it was made by someone who doesn't understand the industry. Maybe they don't know down feather comes from duck and goose. Maybe they think it comes from chicken. Blorge's retail accounts want current prices locked in for next year, and they can easily switch to one of his big Chinese competitors, whose finished products aren't under any tariff threat. That's why Ning is considering moving his own production lines to that country. In the meantime, he is rushing to import as many feathers as he can, and hoping for a resolution between the White House and Beijing. Everyone is very panicked, Ning said. I hope they can reach a deal. Keith Weinberger, CEO of Empire Today, wasn't he terribly worried in the beginning? He thought he had everything under control, as he finalized a presentation on July 30 for the board on dealing with tariffs of 10% on the luxury vinyl planks the home flooring and carpet installer imports from China. Empire's suppliers there had agreed to eat the cost for a while in exchange for a certain level of committed orders. Empire, with $700 million in annual sales, has the wherewithal to provide that. But 2 days later, Weinberger's plans were torched when Trump ordered his administration to consider pushing the duties to 25%. The company, based in Northlake, Illinois, sources all its carpet and a lot of its other flooring in the U.S., but this kind from China, what the industry calls LVP, is the fastest growing part of its business. There is some production in America, but not nearly enough to meet demand. It's not what I want to be spending my time on, but I am worried about the impact this is going to have, said Weinberger, 46, who started his career at Procter & Gamble Co. So Empire recently hired a lobbying firm to help out in Washington. We're hoping for an exemption. We're just trying to do anything we can think of. On Thursday, he and the others may have a clearer picture of the future. That's when the public comment period on the proposed tariffs closes, and, according to people familiar with the matter, Trump wants to move ahead with his plan.